Welcome to The Explainer. Today, we're going to break down one of the most unbelievable single-day reversals in recent memory, and we're going to use a professional research note to walk us through every single twist and turn. So let's set the scene. It's the morning of March 9th, 2026, and you can just feel the panic in the air. Global tensions were boiling over, sending markets into an absolute freefall. The Nasdaq hit this brutal intraday low. Seriously, it looks like a total meltdown was underway. But then, wow, something absolutely incredible happened. By the close of that very same day, the market had staged a furious rally, closing all the way up near 6,800. A massive V-shaped reversal that left pretty much everyone stunned. So, the big question is, right, how in the world does a market go from sheer panic to total euphoria in just a matter of hours? Well, that's exactly what we're going to get into. We've got our hands on this professional research note that breaks down the entire wild ride, from global money flows to the hidden plumbing of the derivatives market. Okay, let's dive right in. So here's our game plan. We'll start with that initial global sell-off, then look at the one headline that changed everything. We'll dive into the market mechanics that acted like gasoline on the fire, check in with the on-the-ground reality, see where the money was moving, and finish with the big showdown. The story versus the data. Okay, so first things first, let's really set the stage here. The day did not start well. I'm talking waves of selling that kicked off in Asia, rolled right through Europe, and then boom, landed right on Wall Street's doorstep. The trigger? It was a 1-2 punch. Escalating tensions in the Middle East and oil prices just rocketing higher. So US markets opened way down and they just kept sliding. But then you start to see this classic pattern emerge. It's called capital repatriation. As things got dicey around the world, money started flowing back into the US, looking for safety. And that started to build a floor under the market. And look, this wasn't some fluke. The note actually points out that this has happened before. In fact, in something like 70 to 80% of similar situations where overseas drama causes a big drop, the US market has a habit of repairing itself on the very same day. For the pros, this is basically a known playbook. But that initial bounce back, that was just the warm-up act. The real show, that explosive rally in the final hour, that wasn't about economics. Nope. It was all about a single, incredibly powerful story. And this timeline, this is where it gets really wild. It just shows you the insane speed of today's markets. We're talking 40 minutes before an official press conference is even supposed to begin, a reporter just drops a summary on social media. And boom, the algos, the trading bots, they see it instantly and just start buying, getting way out in front of the official news and pretty much everyone else. And this right here was the phrase that lit the match. Close to conclusion. That's all it took? The market heard that and thought, okay, this whole geopolitical crisis that's been freaking us out all day, it's basically over. It was exactly what everyone wanted to hear. So what happens next? Well, that headline kicks off a textbook short squeeze. You had all these traders betting the market would keep falling, right? They're the shorts. All of a sudden, they're in a world of hurt and are forced to buy, just to stop the bleeding. And that forced buying, it's like pouring jet fuel on the rally's fire. Okay, so you have this huge news catalyst. But here's the thing. It didn't just land in a normal market environment. No, it landed in a market that was basically a tinderbox, just waiting for a spark. The market was in what's known as a negative gamma state. Now, what does that even mean? Think of it like this. A whole bunch of investors were scared, so they bought insurance, put options. The dealers who sold them that insurance have to manage their own risk. So when the market falls, they're forced to sell, which makes it fall faster. But, and this is the key part, when the market goes up, they're forced to buy. It turns the whole market into a giant coiled spring, ready to amplify moves in either direction. And this shows you that crazy feedback loop perfectly. Step 1, the news headline gives the market a little push upward. Step 2, because of that negative gamma we just talked about, options dealers are now forced to buy futures to hedge themselves. And that leads to step 3. That forced mechanical buying creates a massive wave of upward pressure, and the rebound just goes vertical. It's a chain reaction that turns a spark into an explosion. So, okay, the stock market is popping champagne corks celebrating this headline, but, and this is a huge but, the research note is quick to slam on the brakes and say, hey, wait a minute. The reality on the ground, especially if you looked at the energy markets, was telling a completely different story, a much scarier one. I mean, think about this divergence. While stocks were flying high on hopes of peace, oil, West Texas Intermediate crude, was surging to $120 a barrel. We hadn't seen a price like that since mid-2022. That is not a sign of peace. That's a blinking red light for a major supply shock. And the note lays out the cold, hard facts. We're talking about real, physical damage to fuel facilities. Iran's new leadership was digging in its heels. Critical shipping lanes were getting disrupted, forcing actual production cuts. You can't just flip a switch and bring oil production back online. We're talking weeks, maybe even a couple of months. A press conference headline just can't fix that.
All right, so you've got this massive macro mess. The big question is, where did the money actually go? The note dives into some really interesting trades happening under the surface that tell their own story. One of the coolest things highlighted was this geopolitical decoupling trade. So take the memory chip sector. What happened was investors started panicking and dumping shares of the big Asian players like SK Hynix and Samsung. Why? Because they were worried about supply chains over there. But here's the twist. They didn't just sell the sector. They took that same money and immediately plowed it into a US-based company like SNDK. So it wasn't a bet against the tech, it was a bet against the geography. At the same time, all eyes were on a couple of huge tech earnings reports coming up. For a company like Oracle, the only thing that mattered was their RPO growth. That's basically a window into their future cloud business. And for Adobe, everyone wanted to know if they were actually making money from all their new AI features. Could they turn the hype into actual sales? And you want to talk about belief in the AI theme? The S&P 500 itself gave it a huge vote of confidence. They announced they were adding these 3 companies. And what do they all do? They build the guts of AI, the optical communications, the data center cooling. That's the real plumbing. And man, the market loved it. Look at Lumentum. It shot up almost 15% on the news. So the closing bell rings, and the mood is euphoric. The narrative won the day. But the research note ends with a serious warning, basically saying this rally is standing on pretty shaky ground, and it's about to face some big, immediate tests. The note calls this late-day melt-up a preview of something called a taco trade. And yes, TACO. It's an acronym for There Are Cops Around. It's this idea that when things get really bad, especially in an election year, the market just believes the authorities, the cops, will step in and save the day. They won't let a crash happen. And really, that's what it all boils down to. That's the tension hanging over everything. On one side, you have this powerful, feel-good story that the market bought into. But on the other, you've got the hard reality of an energy shock and the big one, a crucial CPI inflation report coming out on Wednesday. So the question is, which one wins? The story or the data? That's the battle we're about to see play out.